Okay, what I'm going to do today is I'm going to run through an interesting stock idea, UK small caps, and I'm just going to frame out the technicals of this idea. You know, the fundamentals, it trades towards what I like to see small caps trading towards. This one's trading actually moving from a negative to a positive, so it's expected to return to growth, I suppose is the best way of putting it. And you can see earnings per share, pre-tax profit, turnover, all expected to post. So the fundamentals, moving playing field, the technicals, another moving playing field. But I'm just going to frame this idea out in a way that I capture reward to risk. So not so important the name on the stock. You know, everyone trades towards their own sort of beliefs. I'm just going to show you some, you know, basic charting, but very powerful charting, because a lot of people place too much weight on one or the other, and you know, I think it's a good to match both. It is match both, and then also stalk your entry. So I'm going to run through this one. First things first, a lot of people will come at, you know, who are new to charting, will be zoomed in and they'll be thinking, well, let's you know, what's happening on the last few days. You know, what's happening in the last few days is reality. You know, that's where the price is, but the bigger structure will show you where price is relative to how the stock actually trades. So let's just zoom this chart right out. Obviously this one went up like a bottle of pop on news, and as all these news spikes do, they come back down to earth. We're not interested in anything what's happened before this low is put in here. So basic charting 101. This is the active low. That's something on there. I've done on guaranteed stops before now as well. This is the active low, what's in play on this stock. Now let's just zoom in. So all we've got is a downtrend so far, and it's put a new 52-week low in. And then it started to climb. And we got a couple of meaningful levels here. So we got a meaningful level here, and then we got another meaningful level here. Q, potential line in the sand. So what does that mean? You know, active low, higher low, higher low, higher low. There is no higher high in this market. I mean, this was a higher high, but stocks what are bottoming tend to want to consolidate. So I let this consolidate. Some of these, you know, higher highs, just a straight higher high, will work perfectly well. It's Dow theory, you know. This one kind of doesn't trade that long above at the higher high. Coils back up, and what do we call it? Everyone calls it a different name. You know, all the famous traders are trying to coin it as their own. Basically, it's just a base. You know, I know everyone's going to shout, yeah, what's his name calls it this, or, you know, head and shoulders bottom, rising where. It's just a base. You know, there's no magic behind the names behind these things. It's just a base. And what is a base? It's a consolidation of price. The bears are running out of control here. You know, it's tightening in the right hand side. The bears cannot push it back below any of these lows. So the switch what turns this from potential bullish to bullish is this day here. You know, this is basically a change in power. You know, the bulls have basically won the battle. So nothing wrong with that setup there. You know, all day long, that is an interesting area for me to load a trade. But I didn't have any cash at the time to load this trade. And as the market sometimes plays out, a terrible market environment brings the stock right back in. So this is a really simple sort of support resistance scenario here, and support resistance is an area. The thing with support resistance, you've got to go for the meaningful ones. So this is a meaningful break, so this is now a meaningful level. So what was resistance temporarily is now support. So what does that mean? You know, price moves out. You know, it turns the market into, from sell the rip or sell the rallies, it turns it into a buy the dip scenario. So where should the dip be bought from? Well, you don't always get an opportunity to buy the dip. The strongest ones don't tend to give you an opportunity. But a terrible market can sometimes bring something into a very interesting level. So this is the 10-month. It's the same as the 200-day average. Have I got a 200-day? There's your 200-day. This drifted back in to a very interesting area. Now, I've actually got a 2-day chart up here. You know, put a daily chart up. This is what it's doing. I'm involved somewhere in this this zone here. Not rocket science, more to do with getting getting my order from an area what gives me reward to risk. So let's just move out this chart and say, well, what is reward to risk? I will use a Fibonacci tool, and I will just basically measure out a measured move of this previous pullback. And you'll see these 3 lines here. So I can be wrong here with a target up here. And I say a target, you know, I want this one to ride off into the future and keep trending. But I also want reward to risk when I do enter a stock. You know, I don't want to be taking from a pullback. I like to get some kind of reward to risk. You know, in my view, the market runs on reward to risk. So when stocks stop going down and they start to form a good little pullback zone, it's usually in a reward to risk area. And this stock here, from this zone here, offers 4. So you're risking 1. You're risking this much to make 4 times that amount into a measured move. Now I have my own little ways of loading these things, own little ways of being wrong. I don't basically risk too much at this area. I just want a reward to risk scenario. I build things like that. My money management makes sure, you know, I look into what if this came out with a profit warning, it gapped down 50%, how much am I prepared to get hurt? You know, if this went bankrupt in the future, how much am I prepared to get hurt? all this is built into my position sizing. You know, I position size for these things up front, but I'm just looking at reward to risk here. Throw the spreads in the mix. You know, you want to be getting at least 2 to 1 to a normal move. Risking 1 to make 2, you know, takes pressure off being right. You know, you can be right 40% of the time and still be okay. You know, if you're right half the time, you're actually, you know, for every 1 you risk, you're making 2, and you're actually killing it in the markets. You know, keeping an average R up of that amount. But this quick tutorial is just one of the interesting stocks in the market. What I have loaded in this area here. I have absolutely no idea what the future will bring, but my job is to take the best opportunities, looking at growth stocks, potential growth stocks, what will trend for the future, by the lowest risk scenarios in uptrends. You know, I don't want to be buying anything in a downtrend. I want something to, you know, it takes time to base out. And I want to slingshot into a possible trend. And that is how I buy a pullback. For more ShareScope tutorials, follow the link on the left. If you have any tutorial requests, drop them in the comments below. If you're thinking of trying ShareScope, there's a link below this video to get an extra month free. And don't forget to hit the subscribe.